Hey everybody, Signet here with the Bullish Bears. Doing a futures video on chart setups. A couple of main things you need to have is the active trader. That's what they call it on Thinkorswim. You might also have known it as the dome. That's the depth of market. Another thing you want to have on your charts is the news. And you don't see it right now, but time and sales is another one. You have level 2 already built into the active trader, so you don't have to take any more chart space up to put in a level 2 because that is already in this ladder. What you're looking at here is an anchor signal setup. Now, you don't necessarily need to have an anchor signal. You could just trade on one chart. This is more of a user preference. After I've done my initial analysis on the day on the larger time frames, I go into a smaller time frame and look with the anchor, which is what this chart on the left is called. I look on the anchor for my trade setups, and then I trade those setups on my signal chart, which is the chart on the right. I'm using a 30-minute, 5-minute, but whatever combination you use is going to have to really fit your kind of trading. I don't scalp with candles, so when I'm scalping, I use a level 4 order flow, and that doesn't require candles at all. When I am trading candles, I'm taking more of position trades, and that's really what I do a lot is position trading. For that, I just use the dome, and I like this multiple chart setup. This is a basic multiple chart setup, and I will be sharing that in the link provided with this video. You can see that I'm on Thinkorswim in the flex grid. That's how I'm able to have these at different levels. What we also can do is just go back to the regular charts, and here you can see we've got level the time and sales here next to the active trader and then the news below. This is a really comfortable setup that I like to use when I'm already in the trade. All right, so again, if you are just trying to figure out what you want or what kind of chart time frame is going to work for you, it's going to be a little bit of hit and miss. You got to give something a little bit of time and then determine if it's really right for you or not. It's hard to have somebody else come in and tell you what time frame to use, right? Because it really has to fit your trading and your strategy. That would be like somebody coming in and telling you what kind of shoes you have to wear, right? It's just too personal. The idea is that you're going to want to use a high enough time frame that you can trust the signals that you do see, right? I'm sure that you've heard about looking at, say, a bull flag or a bear flag on a 1 minute and then watching that bull flag fail, right? Because those smaller time frame price patterns will fail more often than your larger time frames. And yet you can't be so far out, say on a 1 hour or a 2 hour, that the signal is really late in the trading day, right? So finding that sweet spot really comes down to the user and the preferences for how you trade. So these 3 links are going to be in the video description. Chart Basics Single, what you're seeing here. Chart Basics Anchor Signal, which will be again using charts, but there'll be 2 of them with the higher time frame and the lower. And then the third one will be Chart Basics Anchor Signal from a flex grid standpoint. So those 3 will be in the description. And this is a basic setup. Now, what I also wanted to show you is market internals or market breadth. You do have those on Thinkorswim, and there's probably, other charting brokerage platforms that have it also. And that will be a more in-depth perspective on the marketplace. It's not level 4. That doesn't require charts at all, so it's not really something I'm going to cover in this video. But instead, it's more of getting a grasp of the overall market and a few more things that can help you when you are just getting started into futures. All right, so what we have on the screen here is the advanced decline from the S&P and the tick. I still have my 5-day, 5-minute, and I still have the DOM, the active trader. It'd be a good idea to add news. So we're going to just kind of shake things around here and put the news into it. Kind of clean that up, drop it down. And having the time and sales it's really a bit of a lifesaver. So it's going to get a little more crowded. Now the AD and the tick is more of just getting a glimpse of where it's at, what's going on. It's not something that you have to sit and stare at all day long. I've added my own drawing lines to mark out these levels. You don't have to have them. It just makes it easier to see. And for just a moment, I'm going to go into those charts so you can see it from a bigger perspective. This is the advancing and declining issues differences. It's called the AD. The one that we're looking at is the S&P 500 advancing declining, so it's the ADSPD. At a glance, you want to see where it opens with the market, and it only works when the market is open. And you just kind of want to see where it is. Is it somewhere around zero? Is it crossing from from above to below or from below to above? Is it maintaining itself right around that 0 to 100 range on either side? These are bullish or bearish indications. Another thing is it maintaining itself at a far distance, somewhere between the 3 and the 400s? Again, it's not something you really need to stare at all day long. You just want to get a glimpse of where the issues are. Is there a trend that you can identify? And it's not something you need to measure. You don't need indicators. If you look at this thing and in 2 seconds you say, oh man, it's trending. It's trending. If you look at it and within seconds you say, man, this thing's going sideways. It's going sideways. That's it. It's that simple. So no indicators, no drawing tools other than these lines that you already see. I'm going to jump over to the next one here. Now this is tick, and it's going to be a little hard to see. I could probably jump in and change the colors around. I normally keep another box down here, and I change the color on that to some kind of bullish looking color. We can just do that real quick. I have like a pinkish color. So something that's easily visualized between the 500 and 0, and between 0 and negative 500. Now, if you haven't used the tick, take a little bit of time to get familiar with this. What you're wanting to identify is tick extremes. When the market presses into an extreme, you are almost guaranteed to see whatever it is that you're trading pause in the move that it was making. Nothing is 100%, but this has been a very reliable indicator as long as I've used it. When it goes into the extremes from one direction or another, what you're trading is going to pause. It might not necessarily reverse, but whatever move it was making is about to stop. So it's a great time to get risk out. What you also want to identify is where it is maintaining itself. So if you look at the tick and it's staying here in this blue section a lot and it's rarely coming down into the red, that's a bullish day. If you look at it and it's staying down here in the red and it's rarely going into the blue, that's a bearish day. If it looks like it does here today, crossing back and forth, back and forth, back and forth, that's a very sideways day. It's a range day. Okay, so again, it's something that you can look at a glance. You just take a look at it. What kind of day are we having, and let it go. You can use alerts. Put an alert here in the 800s, 900s, even at 1,000 if you want to. When it happens, Thinkorswim will message you and tell you there's an extreme, and you can just hit the button and get risk out. So that's a little more advanced charting. It doesn't take much to set this up. And again, I'm going to share this link in the video description so you'll have this set up. If you load this and you don't see any lines or rectangles or anything like that, check the drawing level. It might load on your Thinkorswim where it says default. If it does, click on default and see if it has price levels drawn on there. And then, of course, if it does, click the lines. All right, so now you have a picture or an understanding of how to set up your futures charts to get started. Now, again, you're going to grow as a trader, and you're going to get to the point where you want your own setups because you're going to tweak things and adjust them, and you're going to make this more personable to you. But if you're just getting started, having a normal, what do we call a consistent setup would really help you out.